Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 11th, 2023. A few seconds of silence for the passing of guitar legend Jeff Beck, the original Yardbird. Boy. So that's what I will be listening to tonight. All right, we'll start tonight with the sniper trade of the day. And we had a gap up. So we're on a 3-minute chart. And we're looking at Frog Champion Mexico, EWW. So the blue box is our opening range 3. The second bar takes out the high of the opening range 3. So we put our standard risk box in. And we are on the long side. Checker hold. We get about 5 bars into that thing, and it is already, right from the get-go, well underway. And so we can just get our risk out. And lock in that gain for no lose plus dinner for 2. Now, if this is the low of the day quiz, how high would we project? What would we call the maximum reasonable intraday move? How would we find that? Yeah, if this is the MMRB, which I happen to be using as a 1/10 of the range stat. Really the right answer on this, because we're not always, and you may not always be using 1/10 of the range stat as your MMRB. So the real answer on this is you find the low of the day, and then you add a range stat, which is the average range of the last 30 days plus 1 standard deviation. And that works out to be the maximum reasonable intraday move. Well, why is that? Because the range stat, or the R stat as we call it, it looks back 30 days, and 85% of the previous days, the previous 30 days ranges did not exceed the range stat. Average plus 1 SD. So that means only 1 time out of 6 in that whole 30-day look back did it ever move larger than, from the low of the day to the high, larger than a range stat. Which means that you're not entitled to believe that today's move is going to be one of those 15 percenters, that 1 out of 6 that exceeded the range stat. So if it actually goes from the low of the day to the high of the day and equals a range stat, then that's going to be a reasonable move, but the maximum reasonable intraday move. So you would simply take this low of the day, add a range stat, and then that would be your upward move. So meanwhile, somewhere in here we've got to have that locked in. And then you can decide where you want to put your stop to lock in more. You might be at a 1 day low, or 1 bar low, 2 bar low. The bottom of this little consolidation, you might just say, let me take a that MMRB and just hang it off the top, that would be about the 2-bar low. So you could pick any of those that you wish. So I'm just going to put mine right there. Let's say the bottom skin of the dragon. Your call. So now we notice that we get a bit of an orderly retracement to the edge of the dragon. The PSAR is still holding firm. The R10 makes that little low and then resumes, and then it takes out the peak of the R10 here. What would we call that pattern? Emerging dragon. He's emerging out of the waves. If we had entered in this little zone inside here, where that yellow space is, what would we call that space between the peak of the R10 and the belly of the R10? What would we call that space inside here? We would call that a pocket, because it's a quiet space before the breakout has occurred, and it already rejected the failure. So there's this little bit of uncertainty going on in here. That little space inside there is called the pocket. And you could make a decision to enter inside here as a pocket entry, which front runs a breakout of the R10. Or you could wait for the emerging dragon, where you get a little bit more confirmation. And the difference would be that much. If this thing works, then you will say, well, of course I should take the pocket. I like taking the pocket entry most of the time because it already had a chance to fail, and it didn't, and the dragon is still up. And as soon as it breaks above this peak of the RL10, it should really go. So I feel like I can get a better fill inside the pocket. And I'm usually willing to go ahead and take that shot. And then if it does fail, so if I entered here and then it does fail, I end up losing less than if I had entered here and it failed. On the same position size, it just take half the loss. So in my view, that pocket entry is pretty good. But I didn't take it this time. I ended up getting about... So 2R battle drill would be somewhere around the pocket too. I was a little late on the entry. Span of control. So we're in. So now my job is if I see price right here, I probably have my stop right about here. I'm not even offended if you decide just to bring this up here so that the second entry is in the money. You might also put it right at the edge of the RL10 with the reasoning that if this thing is really going to work, if this whole pattern of the emergent dragon is going to go, then what was once resistance should now be support. And then if price were to go below that, then you'd want to be out. So you could make a technical argument that you could put your stop right there. So those are choices that you get to make. No matter what you did, it was a good. Now I'm noticing we have... So this was our first R10 rollover and cross the baby. So the baby dragon is that little purple line. That's a 3-period SMA of the RL10. So it's whenever that RL10 is just running up, there's always going to be that little gap as that simple moving average is trailing it. When we get that first rollover, here's the first test, which led to this little sell-off channel. We can then think of that first move as the first leg. Then it holds here. And this emerging dragon pattern we would also think of as a kata 2 because we are buying on a higher low after the confirmation of a good first leg, and this feels like a continuation pattern. Now here's the second test. Now notice that the size of leg 2 is a little bit, that's leg 2. Leg 2 is a little bit shorter than leg 1, so there's not quite as much steam in the engine. And you'll notice that because of this little sell-off in here, that our MACD histogram went from the strong up down to the 0 line, and it's going to flirt around the 0 line. So this is measurably weaker. Now, why does that matter? Because even if you didn't get the first one and you just took the second one, you see 1, you plan for 2, and you hope for 3. I mean, I'd like to see this continue to go. But because that leg is smaller, I'm tempted to just say I've had my day in court. I feel pretty good. We've got 1, 2, 3, 3.5 R on the first position and 1 R on the second position. So we're at about 4.5 already at this point, and it's resting right on the PSAR. So you would not be wrong to just go ahead and take that now. Instead of waiting for the R10 to continue to fail and where it hits the PSAR, so in about 1 or 2 bars, if this doesn't go in 1 or 2 bars, we should be out of that position. So you might just say, well, just let me go ahead and take it now. Nothing wrong with that. Yeah, I just want you to notice that as soon as you start getting that first little piece of weakness, notice how quickly that has an impact on the MACD histogram. So if anybody else is out there in that trade, and if they're using oscillators, because mathematics, you're always going to see that weakness, and that may be enough if they're trading off indicators to make them want to get out sooner. By the time you get the second piece of weakness, now you have really introduced weakness into the MACD, and then notice that we're already in the winter. So my point is that would not be a bad exit right there. Check or hold? And I just go ahead and take that for about 4.5. Now, as I'm visually framing this, if this consolidation zone were to fail, my targets would be something like here. I think it could get to that level. Now, then my question would be, is that going to act as support like it did last time, or is it going to fail? If it fails through there, I would not be surprised to see it come all the way down, all the way back to the 0 line. All right, so there's 2 legs of a tactical trade to the downside. How would I determine how much is available to the upside? Again, I'd come to the low of the day and post up a plus range stat, and then I get some kind of upper price limit somewhere up in here, which works out to be 10 of those boxes, 2, 3, 4, 5, 6. So we're only about 1, 2, 3, 4. We're only about 40% of the range stats so far on this move. So we could see another move of that magnitude to the upside, and we're still within the range of reasonable normal intraday. Check or hold? It's not a bad idea when you're setting up your charts ahead of time and you already know what the size of the R10 is, to go ahead and put a box on here with your range stats so that you can quickly drop that template on there and see what your reasonable ranges are for the day. All right, so what we notice is This led to a kata 2. Now the belly of the RL10 also holds at a higher level, and it crosses back above the dragon, takes out the PSAR, so we're ready to make that trade. We drop the same standard risk box on there. What pattern would we call that? Well, that's what Mike, that's what I mean by framing. So, but what I'm doing in this little demonstration of support and resistance and range stat is we're constructing a price frame, price ladders that allow us to begin to visualize where this trade can go in a routine way, the same way a carpenter uses frames and structures to control his craftsmanship. What we're doing is framing. Okay, so we've got this. This is we'd call that a K2. It's already so close to the peak of the RL10 that as soon as it gets above here, this thing could be free and clear. So that could really go. By the time it's about 5 or 7 bars in, we got to get our stop to here and lock in our gain on this next wave. Now, we're on a 3-minute chart, so on the 3-minute chart we see this as leg 1 and leg 2. But if somebody was trading 5-minute or 10-minute legs, this whole pattern from here to here might just be leg 1. And then they might be looking at this as leg 2. And now we're already seeing that next little phase move, that next little move to the upside. Okay? So if you were in this position, you could put a stop 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 5 would be a 1-bar low. 4 would be the upper skin of the dragon, spine of the dragon, lower skin of the dragon, the PSAR, and this a 1R box is probably right around 1 as well. So just where would you put your stop? 1, 2, 3, 4, or 5? Any one of them is going to guarantee a winning trade. So I see a vote for 3, spine of the dragon, which is approximately also a 2-bar low. That looks pretty good too. A trailing 1R stop ain't bad either. If you picked 1, 2, or 3, you're still in the trade. If you picked 4, you cashed a 1R win. If you exited at 4 or 5, then you would still want to take that re-entry here where I took my second entry. And the reason being is that there's still 4 risk boxes, 4 MMRBs to the upside, because now we're about 60% of an R stat, which means we still have 4 more boxes of R10 to the upside. And if we're risking 1, and if we're going to give back 1, we still have 2 units of reward of reasonably available, and that's our 2-to-1 reward to risk ratio. I had my stop at 3, so now I've got just about 2R in hand and money in the bank from the first series. So the second entry is again slightly above the peak of the RL10. So what would we call that pattern? Emerging dragon. Yep. By this far into the trade, we're about another 5 bars into the trade. And if our entry was here, I want to make sure that I get my stop, which was probably there or here. I want to get that up into here so that I can lock in. I want to lock in that little wedge. But notice how quickly this is already starting to roll over. The size of the previous leg was about the size of this leg. Neither one was as large as this leg. This is already starting to roll over after half a leg up, so I feel like I want to get my stop to here now. Okay. And exit shortly thereafter. Excuse me. And closes out to the rest of the day. Excuse me. There was an opportunity if you'd been sticking around, for a Z3P collapsing dragon, but this was such a good move, and it's already after 3 p.m. that I don't monkey around with it. I'm very content to have made that trade. This is typical behavior of EWW, which is the Exchange Traded Fund for Mexico, which is a frog champion, meaning that it makes intraday directional moves in a very orderly fashion, is very liquid, and is quite often non-correlated or least correlated to the S&P or to Europe. So this can often make directional moves when the larger indexes are choppy. Another trade from today was a core and turbo trade in IWR, so I got a swing trade on this one, which I'm going to review in a second. And this one had a gap up. It broke above the OR3, and because I already had a swing trade kind of in the money, I took a relaxed trade to the upside, recognizing this was my risk box. Added a second position at about 3R, very relaxed, and then picked a time after 3 p.m. to get an orderly exit. So this whole gain on two intraday positions simply raises money that goes towards lowering the cost basis on my swing trade. So IWR, I was already long and had an upward bias, and just kind of oozing back into that one to take advantage of the short-term trend. So that would be core and turbo trading. So now what I want to do is I want to go through at swing portfolio briefly. So this is my tactical list of symbols in TC2000. So I'm going to go instead to a personal list. Now each of these little portfolios are different sets of symbols. Like I have one just with the Dow sectors, some Forex pairs. I've been studying infrastructure companies about rebuilding America and all that. Some favorites, the S&P 100, things where I'm just doing research on a symbol. So I'm going to go to the swing portfolio. And these are the ones that I've been managing, the last couple months. So I'm going to go, since I'm swinging these on 30-minute bars, I want to just take a look at, so this is clean energy. And we had been short this thing for a while. This one was this was a long effort that scratched and then stop and reverse, and a second position and a third position covered, and then that was a stop and reverse, and as you can see, the swing stop never got hit. Now this thing has moved out. There was like a COTA 2 and a COTA 2, and this thing is still really going well. So where I want to be on my stop is probably, I think I want to lock in that whole piece at like 42. So I want to lock in that gain on that much risk. What I like to do is get a swing trade started early intraday and then just leave that in place while it goes through its normal intraday movements, and then once it makes a clear run, then and only then start locking in pieces. Otherwise, this is just a pure day trade, but this is intended as as a swing trade starting from the 30-minute bars, then let it grow for a while in my favor before adjusting. So give it time to grow. This is IWR, so this is the one where you just saw I got a little extra piece on the intraday move. That's the intraday move from today that you saw the intraday piece. So this had a couple scratches. This one I was late getting out of for a micro win, but it keeps holding that support level, so I just put the Kata 2 on it. That thing's really worked well. So now I've moved my stop up to this level under the one-day low, and I feel good about having locked in that. And I will just continue to hit the intraday piece on IWR because this one feels like the market itself went out of bear market into sideways normal, and this is one where it feels like the U.S. residential real estate is doing pretty well. This is Brazil. So that was this was a quick scratch, and then a stop and reverse that paid off. When it came back and held support in here, that would have been the SSC. This was the earliest I could get into the Kata 2 because this was a gap up. So I took the entry on the 30-minute and then just came way down here and accepted that as my risk box. This thing has moved 1, 2, 3 legs up. It's now cleared this, so now this feels like this could really go. So I'm going to move my stop up, I think, like underneath this and just lock in that piece. And if this works tomorrow, if this keeps going, I'll add a second position on a swing using the money made from here to fund that next position. Cliff Natural Resources, I swing that a lot. The most recent one was 5 days ago, and this thing had a number of Kata 2 type raises. It had cleared the emerging dragon, so that one felt safe. Again, I leave that stop in place, give it some time to grow. This thing is going. I'm going to move my stop to here, and then I'll add a second position if it keeps going tomorrow. Mexico, just massive goodness. This is where that weekend report helps. We identified Mexico, Brazil, and Latin America as being in a position of finding strength. So I've had a couple, I had a win on the long side, a win on the short side. This one turned out to be a scratch. I'd gotten 2 positions in quick and then was slow to exit, so that one pretty much scratched out. Then I got a Kata 2 entry here. That thing worked. When it cleared the peak, I added a second position intraday, and that just worked. And now this is free and clear. And today I had my stop here, and today's move was like to this, so I'm moving my stop right up to 55. And this is one that I'll add another position to if it continues that way tomorrow. Now, tomorrow, if this thing goes up and then starts to fail, I will exit all 3 positions and just scratch it, because that is really a pretty nice move in Brazil from, let's call it 50 to 56. That's a 12% move in a matter of about 7 days. So I want to respect that gift and make sure that I've locked it in. Treasuries, we had a short from here and then covered around 100. If it was going to fail below 100, it should have failed. It didn't. So we got that one in. Nice, reasonable stop. This thing has grown. I'm looking for 110 to the upside. This has already had that first significant sell-off and then recovered today. So now we're on that second leg up. And I feel like I need to be right here with my stop tomorrow to lock in that gain, about 4% in treasuries. If it breaks above, say, 106, And if the S&P is down, but Treasuries continue to go up and breaks 106, then I'll put a second position on when it breaks above the 10-day high, with the idea that it could go to 110. Devon Energy, energy just swings really nicely. So here was a COTA 2 and cash. This was a long entry on a COTA 2, which failed for -1R. And then this was I missed the stop and reverse. Then here was a COTA 2 entry on the 5th of January. Standard stop. This thing has made 1, 2, 3, 4. It's trying, but it's still making peaks and selling off. So I'm getting a little concerned. This is getting long in the tooth. So I'm going to move my stop, I think, right up here to about 62.50, just so that I can lock in that gain. If it gets above 64, I would look at a second position. And then finally, U.S. Steel. This long failed. That was a stop and reverse, which paid off. A scratch. I gave it some time. A bunch of COTA 2s. Probably should have hit it here, but I wanted to see it break above this. Friday's move was to here, and that moved our stop to here. And now it's held, but it couldn't break out to a new high, so I'm going to move my stop tomorrow to about 27.30 and give it, because I want to lock in this gain. And I could see that if it gets above 27.75 to add a second position, rather than waiting for the 10-day breakout, because that's the anomaly. This is really the peak. So I'm going to respect that stop and then look to tactically trade that intraday because metals move so nicely. All right, so those are the just a handful of swing trades of things that move nicely on 30-minute bars. They give me some real choices, and that's where I am on that. All right, let's take a look at the traders today. See what they got. All right, so this is Kyun. Nets slight losses for today. Let's see where we're at. This is U.S. Steel on the 3 minutes. I like that short. I think that's supposed to fail right away. You let it come all the way up into here for a -0.9. Still not bad. I'd have been looking at a stop and reverse here. You would not have lost money on that trade. I like that short. When that doesn't even get as low as the previous one, then this is where, as you notice, you've got to take that. That's actually a pocket entry, and now that makes a favorable trade, whereas waiting for confirmation makes it a losing trade. That makes all the difference. I think this is that's an aggressive short because you have the longer and stronger move. It's making higher highs, so getting short in here is an aggressive bet. So you take a loss, and the stop and reverse though is pretty good, and then you got to hit that for the continuation because this leg negated all that downward pressure. This thing is going, and you got to recognize that that's a re-entry, as is that one. This was yesterday from Woj. Chops around a little bit for making some sawdust. Captures the movers in Merck. captures the mover in Alcoa for a 2.5 hour day. Pretty good work. Let's see, Tim. He's got his R3 lines back in. That's where the range expansion is stopped, and now we're going to start to compress. That's why I don't like this entry, because you are already in a sideways chop, and it's compressing, so you're trading inside the river, and there's just nothing there. So learn to see those signs. Wait for this thing to really compress into less than a frog box, and then play the breakouts. And then this is fine. It just didn't follow through, and that's a good scratch. So I think a lot of this is just trading in the chop. That's a good OR3. You got paid. Pretty good exit. OR3 entry. I think we should have captured more of that. And the reason I say that is it made a high and then sold off, made a low, made a nut. So it's definitely rolled over. So I think you can get out here rather than here. That is a Kata 2 to the downside. Should get paid. I like that one. Quick scratch. This is where that next Kata 2 entry is. I like that. I like that. But if you keep firing, if the day job didn't intrude, that would have paid off. So that's pretty good, but we got to capture that one. And then you will notice that when this starts to hold support, where it held support, you would exit somewhere in here on the near side of the dragon. You wouldn't wait for the far side because it's holding support where there was support. So capture what you can capture. Here's the OR3 in Tesla. This would have been a reasonable short, which would have been a micro loss. This OR3 breakout, we should be long here. We get paid. This PSAR could be taken. We'd get paid. This is Mexico. Man, 1, 2. You just saw that one before. Mexico is a beauty. That is a frog champion. Some of the other individual stock symbols don't always trade. Mexico is a great big multi-sector country index with its own currency that has options and its own currency pressure, and that's a frog champion. This is Satya on Tesla, and he gets what was available. So I love the quick exit. It doesn't fail through the dragon, so he gets paid, gets paid, gets paid, gets paid. Quick scratch, 3.5. Kyun. If that's the OR3, if you're going to do that, we could be long here and then just scratch. If it goes up that far and comes back, just scratch it. Then on this wedge, and it crosses the 270, maybe short and gets paid. I like this as a Kata 2. Kata 2, Kata 2, Kata 2. And then when you finally take it, of course, the run is done. That's just a learning point. What you really want to notice in upward trends is where does it find its support? Where does the RL10 turn? Those are the significant price levels. Rising lows. So, Kata 2s. Yep. This is nice work on Tesla from today. After it clears the opening shenanigans here, he gets it on the breakout, gets paid nicely. Might have taken this, considered it. You wouldn't have lost money, but that's a good job right there. It seems like a lot of the panic in Tesla is gone because there were plenty of opportunities and bad news in the market for any of these retracements to have led to collapses back to yesterday's prices, and it didn't. So that actually feels like it's got some positivity for tomorrow. So we'll be ready for that. All right, let's go to dashboard number 1. We've now moved from bearish normal up to sideways normal because we are actually within 0.5% of the 200-day moving average. So it has climbed out of the hole. And now when we look at the 200-day moving average has probably been something like this. There will be all sorts of pundits that say, hey, prices cross the 200, and that will be pretty soon into the bull in their view. Now what we do is we put a 2% band. We put a 2% band around the 200-day moving average and call that sideways. So this has to go up 2.5% more for the sideways to become a bull, and that gives us sort of confirmation that we're well above the 200. And that would then take us up into bullish normal. But pretty good posture. Volatility is still pretty quiet. We're in risk on. This is all systems go to the upside. Little stealth move happening. Diamonds, Cisco, Intel as the strength inside the tech. JP Morgan still continues to beat Goldman and the banks. Still some weakness in Microsoft, United Health, Pfizer, and Merck. So the healthcare is still lagging. So leaders continuing to lead, laggards lag. Today was a relatively small range day, so lots of dojis in the Dow 30. Handful of auto framers better than 2 to 1. Procter gave a triple screen and a 551W swing pattern. Had some strong breakouts in DuPont in the industrials. JP Morgan looking strong. Nike looking strong. And the symbol we highlighted over the weekend as a tech value play, Microsoft has another strong day with almost 3%. It's recovering nicely. In the ETFs, I just want you to notice that this is a real sign of health. When you see that much breakouts to the upside and you're seeing emerging markets and Euro-Asia strong, Mexico and Brazil very strong. That's why I like Mexico on the swing. And why, we're pounding that with core and turbo. And Europe, IEV, also extraordinarily so. So Europe is much stronger than the U.S., as we've seen from the weekend review. I like that metals and mining have had a 2-day and a 10-day strength. That helps me with those swing trades in Cliff and U.S. Steel. Oh, and I should also say the swing trade in IWR feels good as well with a nice big breakout today. That's the residential real estate. Standard numbers in the auto framer and squeezes. Godzilla setup, still a few for the snipers. BAX and LHX, these are kind of stealthy. And then in the tactical symbol set, agriculture, marijuana, Rivian, and VXX, all stealthy Godzillas, all at the bottom of their 150-day and 30-day lookbacks. In the one-day movers, it's worth, I just like to see who had the extraordinary moves today, and I really define that as anything with a one-day z-score greater than 2. So those look pretty interesting. In the most volatiles, I like looking for double green. So that's a very volatile 5-day and a 1-day PPL. Those two I will go look at. DG and PPL as short-term movers and opportunity trades. Standard stats on the tactical symbol set. Actually, I think I forgot to cover that earlier. So just the S&P here. These ones highlighted in yellow are those standard large indexes that we look at for reference. The Qs and Treasuries are very good. So I still like the Qs as that swing trade, or the Treasuries as that swing trade. We're starting to see just a little weakness creeping in emerging markets, although it was still at 0.42. Most everything was above the cut line in the green today. Only a handful of things that were weak, but notice that included U.S. Steel and Alcoa. Cliff was the anomaly in metals that was very strong. Intel is the strongest of the semiconductors. It's better than NVIDIA and Texas Instruments. And clean energy, Simon Property Group. There's real estate with a really strong day. So I love that swing. Okay. In my tactical symbol set, looking at the, sorted by the Z5s, there's Mexico. That's the mover. Real estate is also a mover. So those two really have my attention for close management on the swing trades. I like both of those because they move independently from SPY. One of them is Mexico and the other is residential real estate. So I like it for the fact that it is least correlated with the S&P. This is the tail of the tape. This is telling you that this is a serious broad-based strength. And then notice what's working. Where is it green across the board? That's really where the strength is. Nike, Cliff, JP Morgan in finance, crushing it. And then everything good here on the 2 and 10 days. Notice where the strength is. EFA, Europe, emerging markets, Mexico. This one right here tells you what those great big swing trends and themes are. This is a way to use that multi-time frame analysis based on the NDX. It uses the same look-back periods as the regression line fractal framework, so it is synchronized and mutually supportive with that framework. And again, my default sort is by the NDX 10 descending because I like to play rebounds from oversold. So I like to see things that are strong, that have pulled back over the last 10 days and are finding support. That's like a Kata 2 in a nutshell. Okay? All right, that's everything we got for today. We'll get this published and posted, and we'll be ready for them tomorrow. Take good care.